Oh my fucking god, yo. Oh my fucking yo, if your girl see me if I'm chilling, like mind you, black tea, just on some calm shit, no chain. Like if your girl see me if I was just imagine your girl walking up to me, I'm just like say goodbye to your bitch, nigga. Say goodbye to your bitch, nigga. It's like nah. But hold on. But yeah. Fair value gaps. Today we're getting into the meat of it. Pause. We're getting into the guts of it. Getting into the main. This is gonna be your first real video when you guys could finally understand what the fuck I'm talking about in the live streams. What's kind of this? It's the true stepping stone into understanding what the fuck is going on, right? Liquidity was like a good little intro to what's going on, but this really gives you an understanding to everything, right? Fair value gaps. Fair value gaps, right? FVGs. You guys hear it on TikTok. You guys hear it on YouTube. You guys hear it on Twitter. If you're actually locked in on trading, you guys have this shit popping up on your social media. Because if you're locked in on trading, this shit should be popping up on your shit. You feel me? Because the algorithm is going to be bringing it to your shit. That's how you know you really locked in on this shit. Right? Fair value gaps. Oh my fucking gosh, yo. I don't even got to cut. Still take your shit. Feel me? But yeah, let's get back serious. Fair value gaps. Fair value gaps. What it is, it's an inefficiency. You can call it a fair value gap or an inefficiency, whatever you like to call it. It's an inefficiency, to be plain with it. It's an inefficiency in the market. When I say inefficiency, I mean it is a place that was either overbought or oversold, and the algorithm has to recorrect and fill those orders to make it make sense, right? It has to come back and rebalance the market, as it's called an imbalance as well. I forgot to say that as well. Inefficiency, imbalance, same type of shit. It's an imbalance in the market, and it is a place where it is either overbought or if it's oversold, right? So let me show you guys an example of this. I'm gonna draw it out first, and then I'm gonna show you on the charts. And I hope you guys, if you guys have any questions, Discord, you guys, I'm sure whoever's watching this is probably in my Discord. If you're in my Discord, it's free as well. It's in my Instagram bio if you guys are not in it. But any questions, bro, hit me up, bro. I'm answering all questions. I don't be doing shit. I'm in school, but fuck school. I'll just be straight chat GBT in classes. But if you have any questions, I'm just thinking about trading all day. So I'm open to just conversating with you. If you even want to call, I don't like picking up niggas' calls like that. But if you really have a true intriguing question, I'll be open to a call. But just text me on the Discord. If you have my number, hit my number, bro. Instagram. I'm answering all questions, just trying to help you guys out. Trying to do some good work for the people. Just hit me, bro. Any questions? If you guys are feeling like this shit is hard, anything, hit me. I'm willing to talk to you guys. To the couple people I'm sure that are watching this, not too many people have watched our shit, but this is great value for anybody that's actually taking the time. You guys realize that you guys are learning. For the couple people that are watching this, and we appreciate you as well because you're doing us a service by watching our stuff, because we're obviously trying to grow our social media as well. So we're doing you guys a service. You guys are doing us a service, and we appreciate you guys. And yeah, again, just hit me up, bro. If you got any questions, answering all questions, anything related to trading, even anything outside of trading, we could talk, bro. I'll be bored. I'll just be chilling with my girl. I'll just be thinking about trading all day. But okay, let me show you guys what a bullish fair value gap will look like. A fair value gap is always going to be a don't ask me why I'm standing up either, my nigga. Just know I'm standing up. I'm at your bitch crib. I don't got a seat. You feel me? So it's always gonna be a 3 candle formation, right? 3 candle formation. Let me move this shit over a little bit. 3 candle formation. All right, remember that. A 3 candle formation. So these are candles. I'm gonna make it look how it looks on your chart. Cause that nigga Zay loves, I'm sure if you guys have seen Zay's videos, this nigga loves fucking showing examples using this nigga uses a purple box that looks like this. Like no one understands if you're giving a bullish example versus a bearish example. If you guys see his videos, tell that nigga lock in. But to give you guys a true good example of a bullish, let me not misspeak, a bullish fair value gap, okay? A bullish fair value gap. It's a 3 candle formation that forms this. Just give me a second. Bro, I've been watching some Jersey club videos just because I miss when niggas used to club back in high school. Shit was, niggas used to really be snapping. Not me, but other niggas in my school and shit. Shout out my niggas. But, okay. This is what a bullish fair value gap is. While you guys are looking at the video, try to guess where it is. It's kind of obvious. Think about the word gap. No, dickhead, it's not up here, it's not down here. It is right in the middle of this joint, right? Let me make this blue. Fair value gap is a 3 candle formation where the wick of the first candle in the third fair value gap, the wick of the first candle does not intersect with the wick of the third candle. Okay? And if you guys remember, you guys should remember by now, the wick is this. That's the first wick of the first candle, because this is candle number 1. When I say number one, this is candle number 1. This is candle number 3. Right? This is the third candle. This is the wick. You guys should know this by now, but just in case you're a dick, I'm gonna show you guys again. This is the wick. If you guys still don't know what a wick is, go back and watch the candlestick video that Zay put out. This is wick number 3. This is wick number 1. And you guys see, this wick did not intersect number 3's wick, creating a gap. And the opposite of this, where there would be no fair value gap, would be if the candle's wick were to let me delete this. If the candle's wick were to extend like this, right? Because you see candles sometimes the wicks are long as shit, like this, right? So the wicks are long as shit, and you see there's an intersection between the wick level of number 1 and there's an intersection between 1 and 3. So you guys see there's no gap created. So anytime you see something like this, that means there's no fair value gap. Versus, again, if the wicks are shorter, there is a fair value gap. And if there's no intersection, there's a fair value gap. Right? Fair value gap. That is an example of a bullish fair value gap. And why do I say it's a bullish fair value gap versus a bearish? Up, bullish. Okay, let me get it, because we never really just in case you guys are having trouble remembering what bullish versus bearish is, think of how a bull versus a bear attacks, right? If I'm thinking bullish, this is just a quick little tip just so you guys remember. Bull attacks up, right? These niggas, when they get mad, they go up, right? Like a bull. Versus a bear, them niggas are gonna go down, right? I probably look just dumb as shit just doing that shit, but bears are always gonna attack down. A bear is not gonna go up like a bull on its hind legs. It's gonna go down. So bullish means up, bearish down. So this is a bullish fair value gap. When someone says bullish fair value gap, that means that fair value gap is supporting bullish market movement, bullish market structure, uptrend, supporting price going up. Because that means this is true support and resistance. Not the bullshit that you see that these goofy ass niggas be posting. I don't know why, but it seems like a lot of niggas, like when I say niggas, I mean like niggas like me, Zay. A lot of niggas be trading support and resistance because it's an easy way to trade and it's an easy way to look at the market, even though it's just dumb. Don't follow that shit. But this is true support and resistance. This is what supports price. This is what keeps price going up, because price is rebalancing, coming into the gap, rebalancing these orders. Because you see how it's 3 green candles. It doesn't have to always be 3 green candles as long as they're a gap. But you see how it's strong 3 candles. That means that there was a lot of buyers, right? Since there's a lot of buyers, like I said before in the liquidity, there has to be a lot of sellers. So if there needs to be a lot of sellers, and let's say there wasn't enough sellers in this area, price has to come back down and re-tap into it like this. So a lot of times you guys will see if price is truly bullish, right? If price is truly bullish, bullish fair value gaps will be respected. If price is truly bullish, bullish fair value gaps will be respected. So if the price really wants to go up, and reach for, oh my God, yo. It's like, no, but if price wants to keep going up, that means bullish fair value gaps will be respected. So this should not respect this area if it wants to go down. So if you're on the right side of the market and you know what's going on and you know price wants to get up, this is a telltale sign that price will continue to go up if it rejects off this, because that means we're in bullish market structure, right? So what you'll see is price revisit a fair value gap and react off of it because price is bullish and it's respecting a bullish fair value gap. So then we'll get like a strong, and it's not always a strong reaction, so don't expect this exact pattern, but this is just an example of how price would potentially look. We'll get something like this. Let me make this green. We'll get something like this and a reaction out of this fair value gap, because those orders are being fills, pushing price up. So there's so many buyers, so many people have to be. It's just rebalancing these orders. So it's rebalancing so the market could come to a balance and it can continue in the direction. Because if it keeps going up, and it doesn't rebalance, and there will be no kind of, how do I say it? There will be no balance, just to make it simple, there will be no balance to the market, right? So it comes back into this fair value gap and it reacts off of the fair value gap. That's what fair value gaps are used for. It's a telltale sign of where the market is going to go. And it gives you an idea of what the market wants to do, right? That's why I say it's so important, because there's a lot of people that enter like a good entry model, which you guys will probably not learn because it's something that I learned. This is my first entry model. Well, actually, before I get into that, let me explain the bearish example. So all a bearish example is the other way around, right? So let's make this red. Move this to the other side. Make this red. Make this red. So this would just be the same thing. I don't know if so. This is a bearish fair value gap, right? Because it's just the same thing to the other side. Same thing to the other side, right? So this is a bearish fair value gap. Why is this a bearish fair value gap? Think about it. Because this will hold and acts as a form of support for bearish price action. What did a bearish mean? Remember, bearish attack down, bearish price action. This will support bearish price action. This will support downtrends. So this will show you that market wants to continue going lower. If it comes back into this gap in a bearish downtrend, and it comes and it retraces into this gap, when I say retrace, just like this, let's say it was a green candle back up, and it shows respect and it shows support at this gap, and it comes back down and it gives you a reaction off of this gap like this, right? And it shows a reaction and it's supporting, you could tell that this is bearish price action because it's supporting bearish fair value gaps. So if it's all about looking at the market and letting it tell you what it wants to do, right? You're not trying to predict. You're not trying to predict what's going to happen. You're not trying to predict that it will come in here. Like, let's say I'm on this candle, right? Let's delete this. Let's say how we trade is we don't try to guess what's going to happen. We're going to let it come to us and let it tell us what's going to happen. Am I recording this shit? Oh, I was about to say, nigga. Let's say I'm on this candle, right? Prices. This is the 1 minute. This minute candle's about to end. Just like, let's say it's going up and down. It's going up and down. Let's say it closes like this. I'm not gonna enter simply because it formed a fair value gap, and then next candle forms, right? I'm not gonna enter simply because it has touched this fair value gap, even though a lot of people do, but us personally, and anyone who learns how to trade from me, we're not going to simply enter just because it's touching this fair value gap. We want to see a reaction. We want to see the market tell us that it wants to react off this and it wants to support some sort of bearish price action, because we're never trying to guess what the market is gonna do. We want to understand what the market is telling us and letting it show its hand. And so it's showing its hand by reacting out of this fair value gap and telling us, okay, I want to keep going down. So this is a clear example of a bearish fair value gap, right? Remember, 3 candle formation. A bullish fair value gap is showing support to the upside because bull is up, bull up, versus a bearish fair value gap is a fair value gap that is supporting price to the downside and it will push price down, versus a bullish will push price up, right? And it's an inefficiency, it's an imbalance in the market that in a bullish example, so many people are buying that it has to come back down to rebalance, versus a bearish example, so many people are selling that it has to come back up to rebalance all the orders that were being sold. Right? I hope that makes sense. Any questions? Hit me. Like I said, answering everything. All right. So now let's look at examples on a real chart. All right. Okay. We can go on any time frame. Like I said before, remember, price is fractal. Don't forget, price is fractal. So you'll see these concepts no matter what time frame you're on. You could use these concepts on every single time frame. No matter if I'm on look, you can go down to the 1 second, because everything will occur at this shit looks like some dumb shit. But if you wanted to, you could trade these concepts using any time frame. The 1 second, doesn't matter what time frame. You use the 5 second, it's all gonna show up, right? I could show you examples on every single time frame. Doesn't matter, just whatever you like better, right? I'm gonna go on the 1 minute because actually I'm gonna go on a higher time frame to show you guys, trying to show you guys how I get my bias a little bit, kind of, even though I'm not gonna give you guys full daily bias type thing. But okay, I want you guys, just for context, if you guys can't tell, the white on my chart, the white candles are bullish candles, the black candles are bearish candles. I want you guys to show me, 1, 2, let's see. Show me three, just show me 3 fair value gaps that got respected. And I'll show you guys every single one to see if you guys got one. Show me 3 to 5. Or as many as you could look for. And if you guys paid attention to what I just said, it's pretty obvious what I'm looking at. Okay, so boom. All right, this is a better view. Just show me a bunch of different fair value gaps, or just look it up, or pause the video and just kind of circle it out. Just let your eyes look and understand which ones are fair value gaps, and then unpause the video. Okay. So if we start from here, I'm not gonna go over here just because it's too many examples. But so boom, we have a huge fair value gap right here. Why that shit? Right, huge fair value gap right there. You could see price is supporting, and what type of fair value gap would that be? Pause it, think about it. Bullish or bearish fair value gap? Bearish fair value gap, because it is supporting price going to the downside. It's acting as a form of support going to the downside, or resistance. I don't know, either one, same shit. As you could see, price came up, rebalance these orders, and mind you, it doesn't always have to come all the way to the top. It just has to rebalance it to a certain point. Not a certain point, but it has to at least tap into it, right? It doesn't, let me clarify my words. It doesn't have to, but if you see that it does come up into it, it doesn't have to come to the top. It could even as little as come to the very, very start of it, as long as it's always just a point that you can, a point of interest that you can have as a target for price to rebalance, right? That reminds me of another point that I have to make. But, okay, so this is a bearish fair value gap. You can see price came up into it, respected it, gave a move to the downside. And mind you, I'm on the 4 hour. So this is just higher time frame, getting an understanding of a higher time frame fair value gap. That wouldn't be an entry. You would go down into the 1 minute, and this would just form your idea. But 4 hour fair value gap. Let me give you guys an example of a bullish fair value gap, right? Bullish fair value gap. Let me make it green so it's even more clear. Bullish fair value gap, right? And you guys could see where did price tap into that gap? Yup, right there, dickhead. Yeah, I'm talking to you, nigga. Whoever just said, "Oh, that one right there," yeah, dickhead, it is that one, nigga. It's like, nah, but it tapped into this gap right here, and you could see price wanted to keep going up. As it showed you, it showed its hand, right? It showed its hand that price wanted to keep going up as it respected this gap. It rebalanced the orders that were within here, came in here, respected the gap, and reacted off of it, showing price wanted to continue going up. All right? Now, we have another example right here. What type of imbalance is that? Damn. Sharp bounce. That's a bearish fair value gap. You could see price came down, respected it, showed that price wanted to continue to the downside, and it just showed as a support and resistance, right? As a form of resistance. Bearish fair value gap. Okay, now that my point is very clear and you guys understand what fair value gaps are, on to the next point, the most important point. Like I said in my first video, the market is always targeting a point. Okay, let me pause on this real quick. What I'm going to say now is going to be essential to your understanding of what the market is doing. The market is always looking for liquidity, right? Like I said in my liquidity 1 and liquidity part 2. Market is always looking for liquidity. And if there are orders that need to be rebalanced, what would fair value gaps be considered? Come on, my nigga. If you were paying attention, part 1, part 2, my nigga, come on, my nigga. Resting orders, right? So fair value gaps would be considered liquidity as well, dickhead. Liquidity as well, my nigga. Not just highs and lows, my nigga. Liquidity as well, my nigga. You feel me? So fair value gaps are considered hot liquidity as well. What does that mean? If highs and lows are considered liquidity and market is always targeting either a high or a low, what does that also mean, my nigga? Price is always gonna be targeting high and low, or feel me? Let me walk away. Let me give you a little second, my nigga. Fair value gaps as well, my nigga. If fair value gaps are considered liquidity as well because there's orders within those gaps, it's considered liquidity as well, meaning the market is only ever targeting highs and lows or fair value gaps. All right, let me write that down for you, brother. Let me write that down for you, righteous brother. Market is only targeting highs. Oh, what the fuck? Highs and lows or FVG. FVG stand stupid ass nigga. It's like nah, but highs and lows or fair value gaps, right? Fair value gaps. So if we know, let's say, okay, let me give you guys an example of this, right? Perfect. Okay. Let me guys. So this will give you a key insight to what I'm looking at. Boom, this is perfect right here. Okay, boom, right? This is a low right here, right? This is a low. Do I have a arrow emoji in this shit? I'm gonna just use this little ass finger. This is a low right here, right? This wick right here, that's a low. That's a significant low, right? You see what happened here? What happened here on this candle? This low was swept. This low was swept. And so since that significant low was swept and price can only be targeting highs and lows or fair value gaps, and you're looking for a reaction off of that low to go to the upside because all those sell orders, all that money circulating was swept out of the market, and you want price to go to the buy side, right? You want price to go to buy side, and you want price to go up because it just swept this low, and you're looking for reaction off that low, and you want price to go up because it just swept the orders, the stop losses, all that. A bunch of people are buying, a bunch of people are selling, a bunch of money circulating, and you think price is going to go up. What do you think the next target can be? High, low, or fair value gap. So then you look like, okay, what is an area? So now I want to enter the market. What's an area I can target, right? That's when you go down, you see, okay, boom, this got swept. What are areas I could target? I want you guys to look at the chart and tell me what areas can it target? I'm gonna give you a hint. There's two areas. All right. Okay, boom. It could either target this high, like you guys learned in the fair value gap video, or it could react off of this fair value gap because there's more orders within the fair value gap. So as you could see, swept this low. Don't even worry about it. Just for this example, don't even worry about this high. But just imagine there was no significant high right here. It swept this low. Now you know that there's a huge fair value gap up here. And so it swept this low, and now you know that your target has to be at least to this, somewhere in this gap. So boom, swept here, and now you know, okay, this is not really a huge significant high. So I want to target somewhere within this gap. And when you go down to the lower time frames, like the 1 minute, 2 minute, you'll see lows, you'll see highs within this gap that you could target, right? Since it's such a huge imbalance, you know that price wants to usually wants to dig into this gap. So you go down to the 1 minute and see that there's highs within this gap that you could target because you know it's a higher time frame gap and price wants to target this area. Okay. Now let me give you guys that was kind of an okay example. Let me give you guys a better example. This would be a bullish example. Okay, you could see that this high, right? This high right here, right? That high, what happened to it at 10 o'clock? 10 o'clock is this candle, this big ass white candle. BWC, word. Okay. Got swept, right? Got swept at 10 o'clock. Got swept at 10 o'clock. So what are you thinking? What are you thinking now that got swept? And it tapped into a big ass fair value gap. At this point when this got swept and it kind of tapped into this fair value gap, what are you thinking right now? I want to look to some sort of downside target if it gives me a reaction, right? Okay. Now it got swept. It's kind of chopping around, showing me that it kind of wants to react off of that area and go down. So what is my target to the downside once it sweeps this high? Because we always want to enter somewhat off of a high sweep or a liquidity sweep, because that's always going to be most important to drive price either way. So it swept this high, and it's obviously reacting. You can see by these wicks, it's reacting. It's not really wanting to push up like that, right? So it's not trying to push up like that. So what does it want to do? It wants to kind of react to the downside because it just swept all those buy stops, right? Because there's going to be so many people that put their buy stops, like I explained before, when they're selling, they have these buy stops up here because they have their stop losses up here. There's so many stop losses up here. It got swept. So now price wants to go down, right? What would be your next target? If you have a down, let's say you're back here, right? Let's say you're right here, right? Price is right here. What would be your next target? If you know that lows are points of liquidity that want to be targeted and fair value gaps, what would be your next target? The fucking fair value gap right here. So you know that this got swept. Okay, what's my next target? I want to target the next point of liquidity. And what would be the next point of liquidity? As you guys can see, there's no swing low or significant low before this fair value gap. So my next point of liquidity would be this fair value gap. It would not be this low. That would not be your first target. This would not be your first target because there's a fair value gap before this low. So the first point of liquidity that you want to target where you think the market will go will be this fair value gap. And now, if it violates this fair value gap and doesn't respect this fair value gap, then your next point of liquidity would be this low because they're both forms of liquidity. Fair value gaps, highs and lows, right? And you could see, boom, price is rejecting. Now you know, okay, it's giving me a little bit of reaction. Now I want to go down to a lower time frame and look for my entry model, which you guys will learn. because I'm on the 4 hour. Then I'm going to go down to the 1 minute, 2 minute, 3 minute, 5 minute. Look for my entry model, which I'll show you guys. Or I'm not going to show you yet. Show you guys. Boom, I'm on the 1 minute. I trade the 1 minute. You guys will see. Zay stupid ass trade the 15 minute. You go down to the 1 minute. See, okay, well, let me look for my model now, and I want to target this low because, or this fair value gap. Boom. Okay, I just won my trade. My bias is right because target price wants to keep going down. Say boom. See, hit the fair value gap, rejected it, and now it's supporting price to the upside. Right. It's clear as day. It's clear as day. It's clear it's an algorithm. That's one more point I wanted to, because I feel like we haven't really harped on this. The reason why this works is because this theory of price is based on the fact that there's an algorithm in the markets. You can't have instant orders being filled like this. You can't have price moving every second like this without an algorithm, if you think about it logically. That's why it's not support and resistance. It's not buying and selling pressure, really. It's an algorithm that forces price to move the way it does. And so what algorithms do, they repeat themselves all the time, and they react off certain things because it is hard-coded in an algorithm to always do something. Just like your TikTok reacts off your cookies, all that shit. If that makes sense. The ICT concepts that we are teaching you and that we learn, everything is based off an algorithm, and the algorithm will show its hand every day by repeating the same concepts that we teach you every single day, just like it did right here. We left the fair value gap. We know that the algorithm wants to always target liquidity. It always wants to target orders. Comes down, shows its hand. The algorithm shows its hand, comes down, respects the fair value gap, gives you reaction. And since even again now, okay, it gives me a reaction off this fair value gap, what am I thinking? What's next? What's my next target? Come on, it's easy, my nigga. If it's giving you reaction off of a bullish fair value gap, what is the next target? The high. The high. Because the highs and lows are liquidity as well. Fair value gap, highs and lows are the only forms of liquidity that the market's going to target. So it respects this fair value gap. Let's say you got in the market at this candle. Now you know, okay, I have to be bullish. I got to be bullish because it's respecting bullish price action. It's respecting a bullish fair value gap. So it's telling me that price wants to go up. Now when I'm on the charts, I'm like, okay, I know I have to go on the lower time frame and look for my entry model towards the upside because I can't go against the higher time frame. I have to look for liquidity towards the upside, and I see that this significant low is here. This significant high is here, and I want to target this high because it's the next point of liquidity. And as you can see, just give it a second. Spank. Come on, my nigga. Spank. Come on, my nigga. Spank. Spank, nigga. See? Exactly. It shows its hand every day. If you just really pay attention, take your time, look at the charts, and just look for patterns, right? And I think that should be it for this video. But yeah, that's just basically fair value gaps for you guys to just look into it, go on your charts. I want you guys to mark out, just go on TradingView, mark out a bunch of fair value gaps, go on the higher time frame, lower time frame, see which ones got respected, and see if it jumped off this fair value gap, did it target this high? This bullet, if it hit this bullish fair value gap, did it hit a high? If it hit a sell side fair value gap or a bearish fair value gap, if it went up into the bearish fair value gap, right? Let's say this is a fair value gap right here. Hopefully this makes sense. But you know what I mean if you guys were paying attention. It hit the bearish fair value gap. Did it react and hit a low? If it didn't, that just means the higher time frame is not in your direction, right? Or the price is not targeting where you think you want it to target, because it will always respect the gaps that it wants to target or in the direction of areas it wants to target. And one thing, the reason why Zay, hopefully this video is not too long, but the reason why Zay says not to trade accumulation is because the algorithm and fair value gaps and liquidity do not act the same in those areas of accumulation, because it's called a it's like it gets people to, it just gets a lot of money in the market when it's accumulating, right? So it's not going to do what the algorithm usually does. It's going to give you shit price action. It's going to violate fair value gaps, not respect them it's not going to respect bullish ones. It's not going to respect bearish ones. So it's just going to go down into it, not respect it, not hit the low, go back up. There'll be like a bullish fair value gap, not respect it, not hit the high. That's why you don't want to trade accumulation. You'll see fair value gaps not get respected. Fair value gaps not there. There'll be like points where there's no fair value gaps in price action, and there's no read on price. So that's why you don't want to trade accumulation. But yeah, that should be it. Let me think. Anything else regarding fair value gaps? Oh yeah, just so you guys know. So when people as you guys get into the trading shit and you guys understand what's going on, I'm sure you guys will look on Twitter and all that shit, and people will be talking about the 2022 model, just so you guys have a reference. So you guys, because I feel like it's helpful to know what people are talking about when you're like in Discord groups or you're just looking into the discourse of trading and ICT. So what you'll see a lot is people saying, I trade the 2022, not me specifically, but in general, like people saying that they trade the 2022 model, which is a model from the maker of the theory of ICT concepts. It's something that he taught. It was a way to enter the market. And so it will just be some people enter the market straight off of a fair value gap entry, right? So it will be like, I'm just going on 1 hour, so this is easier. Even though it's a strategy that very well could work. It's what I used to trade originally, where you just enter off a fair value gap and you put your entry at a fair value gap and you wait for the reaction. I don't trade anymore just because I found it not to be that efficient and not that accurate. So when someone says 22 model, all that means is a entry off of a fair value gap. So, which is not my entry, so do not get too like caught up over this, but it's a way that I look for directions of price and where price wants to go and if it's being respected. So 22 model is a break of structure. I'm going to get more into this in another video. Break of structure, BOS, towards the liquidity point, right? This is structure. This low, that means it closes below this low, like a strong close, a strong 3 candles. It shows that price wants to react off that area, or price wants to keep going down, and then it comes back into a fair value gap and reacts. So your entry would be up here, where it kind of, let me delete this. Your entry would be at the starting point of this fair value gap. So you would enter right here, and then it would tap into this gap, and then your entry would just be once it tapped in, and then you would make money as it goes out of the gap. So that's a 2022 model. So it'd just be a break of structure, entry into a fair value gap. You enter at the fair value gap and wait for price to go down in a bearish example. But I'll go over that in another video. Yeah, that's pretty much it. Now let me really show y'all niggas some shit real quick, right? Come on, my nigga. Oh shit. Hold on. Damn. Who's gonna walk away? Here in the deep end.
My